let's get some conversations going from the sidelines of the Global Fintech Fest. Ritu caught up with Yes Bank's Prashant Kumar on the way forward post the deal with SMBC and more importantly, how the company sees growth for loans and asset quality going ahead. Let's hear out a chunk of that conversation.
This is just like they have just closed the deal.
Yeah.
Okay. Their nominee directors have joined our board already. Yeah. Okay. Now I think this is a time where we need to see that how we can work together. Okay. And leverage this relationship for the more business protections. But I think this is just a beginning. Okay.
Sure.
So I would not be saying. I think bank was having a clear-cut strategy. We continue to move and we are able to, I think, demonstrate those kind of outputs, which we were talking to our shareholders always.
But what are the immediate benefits that you think will start to accrue? Earlier, you had spoken about a potential rating upgrade that would lead to a reduction in cost of funds. But immediately, what are you saying?
No, I think one of the very large benefit, okay, there were questions in terms of like what is going to happen to the shareholding of SB.
Yes. Yeah.
I think that questions have been answered. Okay, so those concerns, like what is going to happen to such a large shareholding, that has been answered. That is one thing. The second part, like any future capital requirement of the bank, whether bank would be able to raise that capital in the market, I think that is also answered. Because SMBC coming with more than 24%, and there is a preemptive right which is there with them. Like any future capital raise of the bank, they are entitled for a similar participation. Okay? So I think the two very significant things for any bank, your ability to raise capital.
Yeah.
Okay. Second, in terms of like you are having a long-term investor, first time, who is willing to invest for the future of the bank.
Yeah.
I think that was one piece which was missing so far.
Yeah.
So I think these two things are very critical. But definitely in terms of we are continuously moving on our path which has been decided by the bank.
Yeah.
This would only accelerate that pace.
What happens to SBI stake, which is still at about 10%? Is there any talks of them looking to dilute it anytime soon, or would they want to continue to remain invested?
I think this is what SBI can answer. But
you are former SBI.
No, the former SBI is a separate thing, but I think this is for the SBI to answer.
Yeah.
But I think as of now, first thing, there is no regulatory pressure.
Yeah.
On them in terms of
reducing their stake.
Okay.
Yeah.
So I think, and already SBI have a return of more than double.
Yeah.
Right? Tax-free return.
Yeah.
So I think they would take their own calls at times.
Okay. SMBC now has 2 board members. They are the largest shareholders. In terms of strategic direction for Yes Bank, what changes? Will there be more focus on retail? Are you looking at corporate growing faster, or strategically what changes?
No, I think this is something which we need to sit together and decide. But fundamentally, I think our own journey in terms of having almost 50% on the retail and SMEs, which is 60%, and remaining in terms of corporate.
Yeah.
I think we don't see any fundamental change in this.
Okay.
The reason is that all these strategies are also made, the first in terms of opportunities, the second also in terms of risk management. So I think the call which we have taken in terms of corporate of 40 and retail and SME 60 is a very, very fundamental things in terms of risk distribution.
So that will not change with SMBC coming on board? No, you want to maintain the 60 retail, 40 corporate mix?
40 corporate, because this is more in terms of both opportunities and the distribution of risk.
But in terms of opportunities, are there white spaces that the bank is now looking to explore with the backing of SMBC Wealth Management, for instance, something you had indicated?
No, so I mentioned about wealth management. I mentioned about 2 other things also.
Yeah.
Okay? The other thing was in terms of investment in the new age technologies.
Okay.
Okay. Because you require those investments which are going to give you a return over a period of maybe 3 to 5 years.
Yeah.
Okay. And you need to have a backup of an investor who is willing to invest for that. I also spoke about, we first need to see in terms of how we can invest for a distribution.
Okay, distribution of?
Distribution network.
Okay.
That also requires an investment. Only thing which was picked up during my interview was only the wealth.
But on the wealth management piece, what is the plan? How soon will wheels be set in motion? Are you looking for a partner already?
No, I think this would be too early. I think I just mentioned in terms of these are the opportunities which are available.
Okay.
And at least today we feel more confident that we would be able to invest for the future.
And how soon before we see that elusive rating upgrade, and what happens to the cost of funds?
No, I think it's not elusive rating upgrade. If you see all the 4 domestic rating agencies have rated us AA minus, okay, which is already a rating upgrade which happened. Okay. Now I think going forward in terms of how we continue to deliver in terms of business growth, the profitability, and I think that is how we are expecting a rating upgrade.
But do you expect that 1% ROA target you had set for the end of FY27, could that be expedited?
Maybe.
Okay, to how soon do you think we could get there?
I think this is something, what do I say? We are trying in terms of accelerating those kind of things.
Yeah.
And we already ended the last financial year.
Yeah.
At almost like a 0.8%.
Yes.
When we exited the quarter 4.
Yeah.
So I think we need to continue to work towards that. And we are quite confident that we would be able to build those guidelines.
In terms of business momentum for the second quarter, you reported, I think, a 6.5% growth in advances and about 3.9% sequentially. With the GST cuts benefit kicking in from September, do you think that 10 to 12% target you've set for the year, you could exceed that?
Well, I think if we just see in terms of quarter-on-quarter growth on the advances, okay, which is almost like 3.9%.
Yeah.
Okay. So if you just exclude the quarter 1, which was a very, I would be saying, muted quarter, okay, and if we work in terms of like next 2 quarters, okay, I think 10 to 12% is something which we would be targeting.
Okay.
Okay. Because the issue is like, just because there are certain opportunities available, and you grow faster than the industry, sometimes comes with its own pain points. Okay. So I think we would like to see that we grow in a manner where we are able to take care of the right kind of credit cost.
Are we hearing of a more conservative Yes Bank for
No,
the future?
it's not conservative. I think this would be more prudent. Okay. The banks who have been growing very fast, we have seen multiple examples, the credit cost has come back. So I think it has to be more prudent in terms of ultimately the profitability of the business which we are doing.
The second quarter with all banks will see, with the rate cuts getting effective, some pressure on the margins?
I think this will be the most challenging quarter from the NIM perspective.
Yeah.
Okay. Because most of the rate cuts which have happened would impact come in the second quarter.
Yeah.
But I think quarter 3 onwards.
A meaningful improvement?
Sorry?
A meaningful improvement in margins?
Meaningfully, again, a very subjective.
Since we're not getting numbers, I'm trying to get qualitative comments.
No, I am only saying, definitely this was the most difficult quarter.
Okay.
Going forward, we will definitely see improvement because there was no rate cut which was announced in this policy.
Yeah.
Okay. So I think this quarter would be definitely better than the quarter 2.
All right, this quarter will be definitely better than the quarter 2. That's the word coming in from Yes Bank. Just keep